Today, we are diving into one of the most anticipated IPOs in India's renewable energy sector, NTPC Green Energy Limited. The NTPC Green, as a subsidiary of NTPC, is taking a significant step towards renewable energy. And with the upcoming IPO, there's a lot to unpack. So, should you consider investing in this green IPO? What risks should you be aware of? We are covering it all.
Absolutely. NTPC Green Energy Limited or NGEL isn't just another company going public. It's part of the major push towards sustainable energy. India has set a target of achieving 500 gigawatt of non-fossil energy by 2030, and NGEL is poised to play a big role in that shift. Let's break down what NGEL does and what makes it different from other players in the renewable space.
So, first things first. NGEL is a subsidiary of NTPC, India's leading power producer. Traditionally, NTPC has been all about coal and thermal energy. But NGEL marks a strategic pivot towards renewable energy sources like solar and wind. And this shift isn't just a trend, it's a response to the growing demand for clean energy and, of course, India's own ambition towards climate targets.
Exactly. NGEL's mission is in line with India's 2030 goals for renewable capacity. They're setting themselves up to be significant parts for this tradition, which could mean strong long-term growth potential for investors. That alignment with national energy goals is a positive sign, as it often brings regulatory and financial support.
Now, let's talk about how NTPC Green makes money. The company's revenue primarily comes from producing and selling electricity generated from renewable energy sources, mainly solar and wind. Their earnings are backed by long-term power purchase agreements, or PPAs, which they have with government agencies and corporations. These agreements provide stable and predictable cash flow. Plus, NGEL might also benefit from carbon credits and renewable energy certificates. This could create additional revenue streams as renewable energy becomes increasingly valuable globally. So, in terms of revenue model, NGEL has both stability and growth potential.
Speaking of potential, NGEL has some key competitive advantages. Being backed by NTPC, the largest energy producer in India, gives them access to capital and existing infrastructure that smaller private competitors might not have. This helps them keep borrowing costs low, which is critical for large-scale renewable projects.
And let's not forget regulatory support. With India aiming for aggressively renewable energy targets, NGEL is well aligned with national priorities. This can lead to favorable policies, subsidies, and potentially even faster project approvals. Plus, if NGEL can keep operational costs low thanks to NTPC's established resources, it could strengthen its edge even further. Alright, let's move on to NGEL's growth potential. The company has a lot of room to expand in renewable sector. They are already working on increasing their solar and wind capacity, and they're even exploring green hydrogen, which could open up to export opportunities in the future. And with the government's ongoing push for renewables, paired with its rising electricity demands across India, there's a solid market here. Investors looking for green growth stories could see a lot of potential in NGEL.
Of course, no investment is without its risk. For NGEL, one major risk is policy dependency. Right now, there's benefiting from supportive government policies, but any shift could impact their margins. Another risk is execution. Scaling rapidly is exciting, but it's challenging. If NGEL encounters delays or goes over budget, it could weaken their competitive advantages. And let's not forget about competition. Renewable energy is a hot space with both domestic and international players. Maintaining cost leaderships and quality in execution and crucial for NGEL's success.
Now, on to the financial health. NGEL's future success depends a lot on its ability to generate consistent cash flow from renewable projects. Long-term PPAs are a good indicator here since they ensure steady income. For investors, a stable operating cash flow is a green flag. Plus, NGEL's debt and capital structures are worth watching. Renewable energy projects often require heavy upfront investment, so debt levels are something to keep an eye on. A moderate debt-to-equity ratio would be favorable, and if they can keep their interest coverage ratio strong, it would reduce default risk.
For those interested in valuation, there are few metrics to consider. If you are looking at the price to earning (PE) ratio, it's important to see if it aligns with growth potential. The price to book (PB) ratio is another metric to help assess the valuation based on NGEL's assets and infrastructure.
And then there's the PEG ratio, which compares the PE ratio with the expected growth rate. A PEG ratio close to 1 would seem as favorable, meaning that the company is fairly valued. given its growth prospects. These metrics give investors a sense of whether their stock is over or undervalued compared to its potential.
Now, as a young and growth-focused subsidiary, NGEL probably won't be paying dividends right away. They are likely to reinvest any profits into expanding their renewable assets. However, as their cash flow stabilizes, over time, future dividends could be a possibility.
That's a good point. For now, NGL's value lies in its growth trajectory, but long-term investors might see dividends once the company matures.
So there you have it. NTPC Green Energy Limited offers compelling opportunity for investors looking to get into the renewable energy sector, especially those interested in long-term growth potential. But remember, policy risk, execution challenges, and highly competitive market are important factors to consider.
Absolutely. If you're interested in green energy and believe in India's renewable future, NGEL could be worth keeping on your radar. But as always, do your research and consider your own risk tolerance before investing. Thanks for tuning in to our channel. If you found this breakdown helpful, don't forget to like this video, subscribe to our channel, and share your thoughts on NTPC's Green IPO in the comments below. Until next time, stay informed and invest smart.